I just opened this deal for $500. If the price is above the opening level in 3 minutes, I will make a profit of $480. I used this simple strategy from my subscriber in which he has been steadily earning for half a year at this point, and he was able to increase his capital from $500 to $3,000. And in this video, we will analyze the strategy in great detail, and after watching it, you will be able to apply it right away. And now let's wait for this deal to close and start analyzing. So today we have a strategy based on a combination of 3 indicators, namely parabolic SAR, MACD, and 100 EMA. We will analyze them in great detail, all the features of all the indicators, and figure out how to combine them to get a strategy with a good win rate. And of course, we will backtest the strategy as always, and at the end of the video, I will switch to Quotex and conduct a session using the strategy. But before we start, I would like to remind you that many of the viewers who are watching this video right now are still not subscribed. So what are you doing? What are you doing? So if this video turns out to be useful, do not forget to subscribe so you won't miss any of the new videos. But now let's get finally started. So the first indicator that we need is of course MACD, moving average conversions divergence. Let's add it to our chart and let's talk about it, of course. So MACD indicator is basically needed to find momentum. It helps to find price reversal points on the chart, and of course it predicts it quite well, you know. And this indicator consists of 4 elements. So the green line, this is a MACD line, it's a fast MACD line, fast signal. Then we have signal line, which is a red one. This is a slow signal, and this is a slower moving average. It's needed to smoothen the noises on the chart. You see that on the chart it's like jagged, but the line on the MACD is really soft. And 2 last elements is histogram, that basically shows correlation between green and a red line. The bigger difference between them, the bigger the place between them, the higher the histogram is going to grow. Or if the difference between them is really small, the histogram is going to go down and it's going to get smaller. Basically, in most cases, you don't really need it. You don't really need histogram. The most important thing is the 4th element, the line of 0. This is the center of a histogram. And it makes a lot of sense for you to understand when you need or don't need to enter into a deal. Let me explain. And first of all, of course, let's see how the signal from MACD looks like. So for example, right here we see an obvious signal for an upward trend. So the green line crosses the red one from the bottom up, and this crossover happens lower than the level of 0. And that basically means that we would get this signal and the deal would be closed in black. And a signal for a downward trend is completely like same, but vice versa. The green line crosses the red one. Quotex is dancing around. So the green line crosses the red one from the up to bottom, and this crossover happens higher than the level of 0. And logical question here now, what do we do if we see a signal for a downward trend? For example, right here we see it on the chart, the green one crosses the red one from the bottom, or from up to bottom, but the histogram is completely different. Then you need to completely ignore the signal. And when we have noises like that, we also ignore signals from MACD indicator. So generally simple and easy to understand indicator, right? But the problem is that it still gives you a lot of bad signals, huge percent of losses if you use only MACD. And basically that's connected that sometimes the price consolidating when huge like trend movements don't happen. MACD is going to give you a lot of false signals. That's why we need another indicator to find those trends and trade in the moments where we can get the most money. To filter signals with MACD, we also need 2 other indicators that I told you about. So this is parabolic SAR with standard settings, but the only thing I don't like the green chart and green dots, so I make it blue. And of course moving average with a period of 100, and the type is going to be exponential moving average. If you don't know what moving average is, it's really simple, let me tell you. Moving average is basically the same chart, but it's just in one line. And the period is basically the candlesticks that you're looking at. So let's choose one period of 1. It's going to be right at each candlestick, right? Period of 2 is going to show us the middle between the previous candlestick and the current candlestick, not opening but closing. 5 period is going to show us difference between like 5 candlesticks. In our case, basically we are using a period of 100. This is a really big smoothing, and let me explain why we need that. Basically, it's really simple. Again, thanks to this indicator, we can find global trends easily. Right here, for example, we see obvious downtrend. It is located under the moving average, and that tells us that there is good movement downwards with impulse movements downwards, obviously, and small corrections upwards. And with this indicator, again, everything is really simple. One rule: if the price is lower than exponential moving average, that means we are in a downtrend, and we are only working with deals for a downward trend. And if we're gonna open deals for an upward trend, we're gonna work against the trend, which is a bad idea. I told you about this many times. But of course, some of them can close in black and we can get the money, but statistically you're gonna lose more. So if the exponential moving average is under the chart, that means this is a deal for an upward trend, completely ignoring all the deals for a downward trend. And what comes to parabolic SAR or parabolic SAR, doesn't matter. It's like the same as parabolic in reverse, you know. It shows us this definite micro movements of the price. So if moving average with a period of 100 smoothes everything, but parabolic actually shows us like all the movements upwards and downwards. Indicator is also really simple when the price is going to a new phase. So for example, right here the chart moved to a phase of growth. The little dots are forming under the chart, and when it's dropping, the dots are going to be forming on the top. If we're talking about downtrend, we see really long impulse movements downwards and small correctional movements upwards, which is of course obvious. Again, obvious, everything is obvious. And the rule is really simple: if the dot is under the chart, dots, not one, all of them, we are opening deals for an upward trend. If the dots are upwards above the trend, then we're opening deals for a downward trend. So now we have our MACD and 2 more indicators. Let's get trading and let's use it in one beautiful strategy. Alrighty, so I am on TradingView. I added all the indicators, and we have MACD, parabolic SAR, and of course exponential moving average with a period of 100. So let's see how all of this is going to work together in one strategy. First of all, what are we looking for? We're looking at MACD as first things first, and in this case we see that MACD shows us crossover lower than the level of 0 right here, and we are looking at the deal for an upward trend. 1, 2, we need to see if the price is higher than our exponential moving average. In this case, obviously, yes, the price is higher. We have second signal for an upward trend. And third is we're looking at parabolic SAR, and the dots are lower than the chart, and we have all 3 confirmation for opening a deal for an upward trend. So buy. And what we're gonna do, let's see how this deal would be closed if it was a real situation. So we chose 3 bars for now. I'm working with 3-minute expiration time, and let's see what's gonna happen. And obviously, oh my god, the price rose, and of course at this moment right here in this candlestick, the deal would be closed in black. So deal for a downward trend, everything is the same but vice versa. We see that MACD is higher than the histogram, and also we're looking at parabolic SAR. We have dots above the chart, above the candlesticks, and also the price is lower than the level of moving average. So of course from this point we are going to enter into a deal for 3 minutes, choosing 3 bars as always. And let's see if the deal would be opened right here. Let's put it here, sell. We're selling now, and let's see what's gonna happen in 3 minutes. 1, 2, 3, and whoa, the price dropped and the deal is closed in black. Before we move on to backtesting, I would like to remind you that if you want to learn how to trade competently, I have my online academy where you not only receive exclusive lessons but also support from me and your supervisor along the way. You can also find like-minded people among hundreds of students in our chat. And in general, if you are ready to start trading with us, text me on Telegram, the link to which is, as always, in the description box down below. Alright, so we talked about the rules, and now let's get to backtesting and see how the strategy works on a real market. In this case, we're gonna use historical data of euro and American dollar currency pair, and right here I'm gonna put all the stats of won and lost deals. For example, this is number 1. We see crossover lower than the level of 0. We see the parabolic dots are lower than the chart, and the chart is higher than our moving average. So right here in this point, we would enter into a deal for an upward trend, and 3 minutes later the price would be lower and the deal would be lost, and this is a loss number 1, which is, by the way, funny because globally the movement of the price is correct by how we judged it, but in this case we were probably not lucky. So now let's start the back testing, and I hope I'm not gonna waste all day on that. Oh, well, the backtesting is over, and here are the results. Of 100 trades, 64 of them were closed with a win and 34 with a loss. And that is if we open each trade for $100 with an average payout of 80%, our profit would be $1,720. And given the simplicity of the strategy, I think this is not a bad thing. Alright guys, we are finally on Quotex and we can start our session. So the platform is ready, time frame 1 minute, expiration time is 3 minutes, and money that I'm using today is going to be $200. It's around like 2% of my balance. Indicators are already here, moving average with 100 period, parabolics are with normal settings with 0.02 and 0.2, and MACD is also with standard settings. And now let's wait for me to find the first entry point and start it finally. Alright guys, so the first deal is going to be on a currency pair CHF-GBP, deal for a downward trend, and what do we see here? So here we see the parabolic SAR is higher than our chart, and of course the price went lower than 100 EMA, and MACD also shows us crossover. It showed us somewhere here from this candlestick as far as I understand, but at that moment the price was higher than 100 EMA, and now since it broke this level we can enter into this deal. So let's wait for it to close and see how the session started today. Alrighty guys, so the beginning is good. The session started with $158 in profit. We had this like micro pullback on these two candlesticks, but the deal is still closed in black. Let's continue and try to find another entry point. Alright guys, so we finally got the deal, and we got it from the first point of parabolic SAR. So right now we see that the price is lower than EMA with 100 period. We see our first dot of parabolic, and the crossover on MACD happened on the previous candlestick actually. And we opened the second deal just like the first one for a downward trend, so let's wait and see. Alrighty, second deal is also closed in black. Actually, guys, it looks amazing, but I'm afraid that you're gonna get the impression that this strategy is gonna be like that all the time. We will see how the session is gonna go, but you still need to understand this strategy also gives losses. You need to remember that, and I'm just afraid that beginners gonna think that the strategy is like 100% win rate. That doesn't exist. So I will try to find everything that's possible, and I hope today is not gonna be the day where I'm gonna lose the last deal, but let's see how it's going to end. Oh, by the way, guys, see, we can actually look at this example right here. We have crossover from MACD, but it's a little bit higher than the histogram. But it's like the level of zero is right there, just right there, and the crossover is like a little bit teeny bitty higher. Is it worth it to go into a deal for an upward trend? Debatable. Generally, I think that there is a huge difference if the crossover is going to be on 0.00000005 or all of the zeros and one. There is not big of a difference, but you need to be careful with that. Basically, the student that gave me this strategy, he doesn't open deals in situations like that, but I think that's actually acceptable. Why not? Guys, look at this situation right here. On your CHF we had a deal, we would have the deal, but the signal happened a bit in the past. I think the price right now is a little bit too low, and we lost the moment where we could ride this trend, so I'm not gonna do that. But again, really good setup. Guys, look at this situation. This is our third entry point. We have all the confirmation. We have crossover from MACD higher than the histogram. We have on the second dot of parabolic, we entered into a deal, and the price is of course lower than 100 EMA. And let's see how this is going to work right now with price action. From the point of view of price action, I don't like this deal because it's kind of like a consolidation, so the price can go to either way, and we had this breakthrough, but we have 3 minutes to see what's gonna happen, so let's see. Oh, what's gonna happen? Okay, guys, we have a couple of seconds before this deal is going to be closed, and it's closed, and we lost the money. So what should I do? I like this strategy and I trust it enough, so I'm gonna work with one step of martingale. I think that's a great decision. And it's an interesting situation right here. Maybe we should enter into a second deal right here. I'll move on to something else. It's just because I like the win rate here. It's 85%, and all the rest of the currency pairs are quite low, so should I or should I not? I don't know. I'll think. Maybe I'll find something else. But if not, I'll come back there. Okay, guys. Last deal. It's a little bit dangerous after such a huge red candlestick because there might be a little correction, but it didn't follow on the next candlestick, so I hope everything's gonna be okay. So right now we see crossover of MACD higher than the histogram. We see our dots of parabolic, whatever you wish, and of course the price is under 100 EMA. So now we have to wait for 3 minutes and see how it's gonna end. Alright guys, so the last deal is closed in black. So the final result is 3 deals closed in black and 1 closed in red. And taking into account the fact that we blocked the unprofitable deal with Martingale, the final profit came out to $442. Not too bad. And now guys, if the video turned out to be useful, do not forget to smash that like button and subscribe to the channel, of course. And by the way, there is a playlist with other strategies that I use to conduct 100 deals backtesting on. You can watch those. But that's gonna be it for us for today. Thank you so much for watching, and I will see you in the next one. Bye bye.